Hello, once again. Welcome back, everyone, to another episode of Wave Watch with your host, Sleepy Bull. And I'm back with another one. Today's episode, we're going to go over Bitcoin, the bear case. And we're going to just start right where we left off. In the last video, we spoke about a structure that had formed, being the leading diagonal in 5-wave motion. And we spoke about how we expected, after this little ABC bounce, we expected the beginnings of the third wave, as this was wave 1. And wave 2 seemed to have completed. So now this is the third wave that we expect. So right after that video, literally the next day, we started having this giant decline. So that's the rumblings of the third wave. And very ironic, and note, this is for you guys to it's crazy how these markets play out. Because as you can see, we did a 1, 2. So this is a 1, 2, and now this is a 1, 2. Now what comes next? And we let you see this little ABC here. What comes next is the third of the third. Third of thirds are the most impulsive moves in Elliott wave theory. These are very volatile, very explosive, and they move fast. And won't you believe that the Fed meeting is this week? Literally, that's 3 days away. Right now we're in September 16th. I believe it's 3 days away from the 16th of September. If not 2 days. And so you can literally see a little red candle printing, another little red candle printing, and then boom! Explosive move down. Just goes to show you, these things are all, at least they look premeditated. In any event, the third of the third is projected to be somewhere around here. We expect a back test to the channel. And then wave 5 for wave 3 completion. So we're looking at wave 5 to end somewhere around 34K. And the third of third to complete around 38K. Mind you, this is conservative. And yeah, that's pretty much what I wanted to get at. Also, there's some bullish optimism out there still. But and there was a question on the comment section of the last video, and to that question I respond with, and the question was, how do you know which case will play out, bull or bear? For the most part, you have to kind of have no bias and just see what the waves reveal. That's one. But also on top of that, you have to go with the underlying macro structure. Like, you have to have a macro framework. Like, this framework here is a macro framework of, and I don't have it up here right now, but let me just put it on for you guys to see. Where is my bull count? There we go. Looks like I had that part of the bear count, but yeah. It looks so this is my macro framework. This is 1, 2, 3, 4, 5, where I believe this is topped. And so my framework here says that we have a B, C, 5, 3, 5 pattern following. So I'm following this giant structure to completion. And Yes, I can say that this is the bear count when in actuality it's really a giant bull count, but this is the bear count in the year in the yearly term. I guess within the context of like this year, these last few months, it's bearish, but really in the overall macro context, it's a bullish. So I like to go from the overarching view and follow the wave that it's supposed to, the macro wave that it's supposed to follow. So that's one way to go about it. The next way to go about it is with EMA. EMAs and trend are perfect because they are unbiased and they are unambiguous. They just state the facts. The trend is up or the trend is down, and that's perfect. And something to note: reasons why I'm not as bullish here. Besides the fact that this seems like a classic Wyckoff. Look at the crossovers for the 100 and the 50. Right? Cross down, fake out, cross up, fake out, cross down. If we have a fake out of the 100, and the 100 here is yellow, the 50 is orange, red is 20. So if the orange, which is the 50 EMA, crosses above the 100, again, which right now stands at 60,784, then okay, we're bullish. But right now, this is a fake. This is not a fake out. This is a legit downtrend. And if we look back to the last time this happened here, which coincided in a fake out, and here, which was an actual downtrend. And then the prior time was here, which was another fake out. So you can see the fake out instances, they happen once, but after that, like this is a bear fake out. Well, it's not real. When it happened, it was down here. So it wasn't really a fake out. It was more like a bottom signal at this point. But at this point, it was not a bottom signal. This was a fake out, and then we dropped. This was a fake out, and this was the real signal. So we have a real signal, a fake out, a real signal. Here, this was a real signal. This is for bullish, but for bearish, here we have a real signal. And so what are the odds that this is a fake out? Well, the odds that you have one fake out followed by another fake out, the odds of two fake outs happening back to back, while yes, they may happen, of having a third one is very slim. Very slim. I think it's like, what, 30%? Less than that. So I go by that. But, technical Elliott wave theory terms, following the overarching macro structure really helps. This is unbiased. This EMA analysis is unbiased. It's black and white, and it tells you exactly where the trend is, and so you can follow that momentarily. Even if you get a fake out, you can just reassess. It's not a problem. There's nothing wrong with being wrong. There's nothing wrong with being wrong in your Elliott wave analysis in the short term. On the long term, it's pretty hard to be wrong. Just look at this. This is simple. 1, 2, 3, 4, 1, 2, 3, 4, 5. And if you follow waveform, you get it. So as long as you follow the Elliott wave guidelines, you should be fine. But yeah, that was it. I just wanted to hop on to give my brief analysis of what's to come. We have a 1, 2, wave 3, which is bottoming at 33,688. Wave 4 should be somewhere around here, and wave 5, mind you, this here, let me give you guys accurate wave counts here. It's not a minor. I'm using the minuet. 1, 2, 3. The micro. I'm using micro or submicro. It's better for the vision. In any event, wave 5. This is a wave 1. This is wave 2. This is a wave 3. Wave 3 looks like it'll be here. This is a wave 4. This is a wave 5. Is that correct? Let me make sure wave 3 is accurate. 1, 2, 3, 4, 5, 3. 1, 2, 3. Okay. Yeah, no, so this is actually, there we go. There we go. Excuse me, almost done here, guys. Yeah, so we're looking at a wave 5 of 34,861, somewhere around there. And then once we have that, we'll have ABC up and then another, the terrible leg C down. Again, this is wave 1 of 2 of 3, 4, and 5. We'll see how this plays out. Stay tuned. Sleepy Bull out.